Hey, welcome to the closing beat, everybody. Happy, a little help? Is it Wednesday? I think it's Wednesday. Okay, happy Wednesday, everybody. Welcome, welcome. Hey, this is just a fun show that we do, very laid back, as you can tell, to cover the stock market. The good, the bad, and the ugly. We'll help you out, go over everything along the way. And if you have questions, I'll answer the questions at the end there. Careful, I can't answer like advice-type questions, but I can help you, so we'll dig through that as well. If you're brand new and watching for the first time, we got a game going on right now. No strings attached, no nothing, no spam, no marketing, no phone calls, no nothing. Simply go to the website you see on the bottom right-hand corner of your screen. Guess where you think the Dow will close next week, and whoever's closest without going over will send you $100. Whether it's a gift card or you like us to credit your account here at Jazz Wealth, we'll do it for you. And we will be announcing the winner this Friday, actually. So 2 days from now, we'll see who was closest without going over. Hope you'll play. Sometimes the summer months get a little bit quiet stock market-wise. We have no real events coming up as far as you got the G20 coming up. That's okay. Well, that'll probably create a little excitement. You got earnings season sort of in between right now. There's just not a whole lot going out there. Trade is not really being discussed. It will be right next week. But so there can be some quiet months during the summer. We just like to play games, have a good time. And like I said, no strings attached. You don't have to be a customer or anything. And if you are, we can credit your account or send you $100 either way. Let's take a look at the stock markets today. You got the Dow lower by 39. Not a really big deal. S&P lost 5 and the NASDAQ lost 29. The Russell was positive on the day. I'll cover that here in just a moment. But all in all, just another little quiet down day. You like that, right? I love that. I think it's great. I think the way the markets have moved are really, really good here. I haven't been able to say this in a while, but we've had a very sharp run up, and now we have a very calm pullback. What's that tell you? What does that mean? First of all, this is the dojo. If you want to check it out, if you're one of our customers, you have access to this as well. We did some videos on candlesticks to try to explain what this means in here so you can get a real feel of like the general pulse of the market. And so when a stock market rallies up really sharply, very sharp move, 4 or 5%, whatever, off lows, or whether it shoots to new highs, and then pulls back calmly, that's best case scenario. You don't want a stock market to move straight to new highs, then continue blasting off and just go up in a straight line. It's very difficult for the stock market to maintain that. I use the analogy of running up a hill. If you run up a vertical hill, you're not going to do that forever. You're going to need to take a break at some point. The fact that you take a break and sort of just wait at the top of the hill is fine. If you run up a steep hill, you go to take a break and you start sliding down the hill and you don't have enough energy to hold yourself on the hill, that's not good. We don't want to see that type of a pullback. So I always say when the markets have a really sharp move and it's very exciting for a couple weeks or whatever, you really want a week or two of boring. Right? You snooze fest. You want like no news. You want to see that there's more commercials being played on financial media because they got nothing to talk about. That's what we have going on right now. So it's very, very sort of nice to see the market slowly pull back here. Very good thing. Also, volume well below average. That's good as well. So it tells you that a lot of people have just backed away. They're not pressing the button. They're not buying and selling. They've just simply stopped for a moment and they go, well, give me a reason. Why would I buy here? I just don't know what I'm excited about. I'm not excited about a trade deal because I haven't heard anything. I'm not excited about earnings because I haven't heard anything. I'm not excited about real tweets from President Trump because some of the tweets are pretty mild here lately, and it doesn't really affect the market. So that's where we're at stock market-wise. The Russell 2000 was higher today. It did stay positive. You have, from a fund flow perspective, you have more money now going into the Russell than into the S&P. What does that tell you? What does that tell you? Is that good or is that bad? So typically the S&P 500 wins in terms of money that flows into like the SPY or things like that. I track the SPY. That's actually what you see on the screen here. Well, for the first time in a while, we have more money going into the Russell. So that people are starting to say, okay, I want the opportunity for growth. They may be feeling like they're not going to get that growth here. They want to go to the small cap stocks. Could be some trade stuff going on in there too. That's fine. But that just lets you know there's more money trying to maybe not pick the bottom here, but participate in what could potentially be more growth. Not really an opinion. It's just where the money's going at the moment. So that's that. All right, the NASDAQ down a little bit today as well. Again, small pullback, very easy. You're sort of like cool with that pulling back, no big deal. The Dow's got about 3.7% to get back to all-time highs, so still some work to do there. The S&P's got about 3% or so to get back to these all-time highs. Depends on which ETF you track there. If you want to look at the index, that's cool as well. And the NASDAQ has the most out of the top three. It's got about 5% to go until it gets to new highs. Remember the data we gave you yesterday talking about how good of a stock start it was to June. Well, we won't go over that again, but remember what we talked about after that. The week after tends to be very I don't want to say negative because it was only lower by about 0.75%. I'm sorry, what was it? 0.66% is what it's lower by over the next week. So what does that tell you? Same thing I just said. The markets had a great move up and everybody takes a break for a second. Slight pullback. Huge move up, slight pullback we can live with. Huge move up and a big move down. Okay, we're all scared again, right? We're all wondering, oh crap, that wasn't supposed to go higher. Now we're headed back lower again. The perception and expectations of the markets change. So we're fully expecting the markets to just be calm here for like the next week. That'd be great. I think it'd be a bad thing, honestly, if the markets just took off higher, but it's out of my control, I guess. All right, as far as interest rates go, you have sort of an interesting stat here. We're at 76% of bonds traders now feel that, or they're pricing in, they're betting, they're making decisions that there will be a rate cut by the Federal Reserve by August. So by the end of July, really, is what they mean to say there. And so last time this month, go back to the 12th of last month on the weekday, there was only a 15% chance. What a difference a month makes, right? So in 1 month, people now feel like there's almost certainly going to be a Fed cut. Doesn't mean the Federal Reserve is going to respond to that in any way. Doesn't mean that they're right, that the bonds traders are actually right. It just means that they're pricing that in. They believe that's going to happen. I like to bring that to you guys when I can. For the S&P 500, you now have 51% of stocks in the S&P 500 above the 50-day moving average. That number's dropped just a little bit. And the reason for that, financials. There you go. Financials now account for only 20% of all stocks above the 50-day moving average on the S&P 500, and you could see why. Today they just pulled back a little bit. It's one of the underperformers in the market. Lost about 1% relative to the S&P's 0.2% or 0.18. So that's the reason for the little dip. Yesterday we were at 55%. We're at 51 today. It was basically all financial, some tech stocks as well. Tech stocks, by the way, have fallen to 4th place in that regard, and healthcare has taken over for 3rd place, which I'm just kind of going off on a limb here, but so you can kind of see good day today. The breakout continues in healthcare. We'll go over that here in just a second. As for new highs, you had 22 new highs today. It was a good mix. It's been a good mix for a while. All the stocks hitting new 52-week highs. It's been a broad range of sectors, meaning you have some healthcare, you have some tech, you have some services, you might have some financials in there, some real estate investment trusts. So it's a broad mix of companies. A lot of times what happens is in a very bullish market, there's one sector that's outperforming and something has beat and it stays at the top of the list. So you'll see like all financials hitting new 52-week highs. That's not a good thing. You like to see a broad market slowly making new 52-week highs. Also want to point out a couple of the stocks I know you guys have and I get questions on a lot. Starbucks hitting new 52-week highs today. It's a little extended in the short term, so you'd be okay if that pulled back as well. And Chipotle, new 52-week highs. That's almost now a $750 stock, if you haven't been paying attention. Xerox I thought was interesting as well. This is one of the better performing stocks of the year. Believe it or not, Xerox rivals AMD for one of the better performers, up over 70% a piece. So you just wouldn't, like Xerox, what do they do? Are they still selling printers? Like they don't make the headlines. They're not an exciting, sexy company that people like to invest in. But hey, stock's up over 70% this year already and hit new 52-week highs today. So that's kind of interesting. All right, let's go over to the sector list here. Remember yesterday we said the stocks that were like relatively weak, and I went over the explanation, explained sectors that are relatively weak. We talked about what that means, and yesterday those areas got a bid. Retail, meaning those areas got a little bit of a bullish day. They came in near the top of the list there, which was sort of odd. Markets were down a little bit, and the relative weak areas were where people were putting their money. Well, today you get the vibe of, hey, this is officially summertime because the exact opposite today. They sold off more than the markets today, whether it's retail or the commodities that we talked about, all very weak on the day, energy and so on. So you're getting to sort of, if you've never been through a summertime stock market, you are now getting to sort of feel, all right, this back and forth, this Christmas tree trading, green, red, is pretty typical of the markets, and there'll always be something that stands out as the underperformer or the better performer. Speaking of which, we could look at oil. So oil would be that example today. Stands out way lower on the day. The markets basically were mixed, sort of flat there. Oil sells off 4%. You got inventories that come out every Wednesday, 10:30, and they were higher by 2.2 million barrels. Just here in the States, we were expecting, I believe, 480. It's probably around 480. If that's not last week's number, that was this week. It is 480. Okay. So a lot more oil in the inventories here in, well, Oklahoma than we saw. Week over week, huge change, much more than expected. Therefore, prices come lower. More supply, less price. All right. So that's that one. Semiconductors, they pull back here as well. Remember talking about this one on this last rally, saying this is not the type of rally that shoots back up to all-time highs. As I always say, I hope I'm wrong, and I hope it's very strong, but the type of rally that we saw here, this candlestick sort of bounce, if you follow day by day, it's just not the type of bounce that does retreat to highs. It tends to bounce, take a break like it is, and then if there's more bullishness, give us some reason to buy this area, then you start the next leg there. So this pullback, totally normal. If you happen to be in this category, this sector, you're an active trader and you're participating, you are very comfortable with this pullback. It's a little more than you might want to see, but technically so far, it's a good thing there. Utilities, getting a little bit of a bounce today. Look at the difference, right? We've been talking about the utilities with our customers and, of course, here on the show to say utilities keep getting to a point where they're not only overvalued, but also overpriced. And so we did a whole class for customers to explain that. Look at the difference when something becomes closer to an average value. People want to buy it. It was one of the better performing areas today, up 1.3%. Why wouldn't it be up 1.3% back here or the day before, right? It's simply put, it's just overpriced and overvalued. Anyone who measures that in any way is going to say, I'll wait, right? I'll give it a break here. Let's see if it pulls back. Now they have good reason to say, okay, well, I'll give it a shot. Maybe I'll start a little position or whatever. So utilities, now that they've taken a break from being overpriced and overvalued, what a cool lesson. I know we've tracked that every day just to show you along there. Now, when you look at anything, even the stock market, you look at the stock market and say, okay, we're just a little bit overpriced. It's normal for it to pull back. When you can see that on a chart, not only is it something that the active traders can get pretty good at, but it just lets you have that clarity. If you're a long-term investor, now you can identify, or hopefully can identify, when things are overpriced, and then you just walk away and you go, I don't care if the markets fall. I know it's this normal breathing in and breathing out type cycle, and you get pretty good at kind of spotting when things need to take a little bit of a break and when they're ready for a little bounce. Speaking of bounces, let's look at healthcare real quick. Taking the secret line here in the dojo, you draw your downtrend. We've been talking about this breakout and getting above the 200-day. The word is out, right? All the technical traders that like this is not my opinion. This is just a simple technical pattern. All the people that like that have now identified it and have decided to participate. The volume's a little bit higher. You could see it has these relative strength type days where it's higher versus the market being lower. That's not the first time, by the way. And so pretty cool, right? I think that's a really sort of interesting study, another one where we've just been following it day by day to show you what happens as it happens rather than say, well, I told you that thing was going to bounce. I like to show you ahead of time if I can. All right, sector-wise, you have almost everybody back above the 50-day moving average. You have industrials, which are still working on it, kind of hovering right in that 50-day moving average area. So if you're a discount type trader, you could say, well, everything else is over the 50-day and the industrials are not. Maybe you like that sort of discount. Communications services, there you go, still under the 50-day moving average. Well, and then an obvious one is energy, oil, things like that. If you like discounts, that's where you're looking. If you like momentum and you say, I don't want to pick the bottom, I want to ride the tops here, you've got consumer staples, again, a little overpriced here in the short term, but very, very strong. So XLP is the symbol we use for that. Utilities, we've already mentioned, back above and staying above the 50-day moving average. And believe it or not, you could use healthcare now, right? Healthcare is above the 50-day. It's not as strong as the other ones, but if you're saying, I want to find strength, let it prove it to me, and then participate, well, you've got some choices out there. And if you say, I like to find weakness and look for opportunities with weakness, you've got choices as well. Lets you know the market still has opportunities for both people there, which is good if you want the whole market to rally. So it gives people a lot of choices. All right, what do we have here for stock news? And then I'll take your questions. You got Mattel. They're turning down an offer from I forget the name of it, but it's the MGA, the people that make the Bratz dolls. So Barbie doesn't want to join Bratz, basically. You got Dave & Buster's, and in the scroller below, yes, I did actually get a coupon on Instagram to come there. It's 50% off the tickets there. And, well, that's a good thing for me because you could tell they need the business. Stock was down 22% today. They missed on earnings. They lowered guidance, and they missed on revenue. Overall, people aren't going to Dave & Buster's, but I will be. I'm going to go to the one in Orlando on Sunday for Father's Day, if anybody wants to join me there. So that's Dave & Buster's. That's all earnings related. I believe that was, if not the worst performer, one of the worst performers today. Tesla a little bit lower on the day, sort of an underwhelming shareholder conference from what I read. I didn't watch it. The issue there is, do people really want a Tesla? And Elon Musk having to spend time on that makes it seem like a bigger deal than maybe it really is. So it's one thing if people suggest that there's an issue for people that with demand, like people don't want to buy Teslas. If the CEO doesn't address it and just shows results, we know there's no problem. If people make accusations and the CEO addresses it, why is he playing defense? You notice how Salesforce, you don't see Salesforce on TV playing defense when people badmouth what could potentially happen with them, because they're on offense. They're showing results. Their earnings are proving that everything's doing really well. Speaking of earnings, you got Restoration Hardware. Very good mover here after hours. Back to the 200-day moving average. They reported on all three metrics perfect. The triple whammy, as we say. Beat on earnings, beat on revenue, raised guidance. They're actually moving some of their factories out of China, they said. I haven't read through the whole thing yet, but what I did read, they are able to raise prices. Believe it or not, I don't know if you've ever looked at like a $4,000 table at Restoration Hardware. It's just a table. It's a normal looking table, but it's $4,000. They were able to raise prices even more, and they said customers didn't care. They paid the higher prices. In other words, their profit margin widened, and customers, the demand stayed there. That's impressive. That is a super expensive store. Maybe it's just me. Maybe I just refuse to pay lots of money for furniture. I don't know. Let's move on. Facebook there was lower today. Had some emails that may have put Mark Zuckerberg right in the middle of something he said he had no part of regarding privacy issues there. I don't know. That's the problem with doing stuff online. Someone's going to find out. United Technologies, you got Bill Ackman with Pershing Square. He's a hedge fund activist guy. He doesn't like the idea of the merger. We talked about that yesterday, so we covered that. Tomorrow you got Broadcom. There you go. AVGO is the symbol now that they've merged. Stock down 1.3%, but you have earnings tomorrow. We're expecting $5.20 a share. They'll report after the close. That's really it as far as earnings go. If you like dividends, you got ADP, 79 cents being paid out today. T. Rowe Price, 76 cents. Allegiant, 70 cents. Dr. Pepper Snapple, 65 cents. Gilead Sciences, 63 cents. We own some of those stocks in our dividend funds and other funds here at Jazz Wealth, so we're getting close to payday on those. Nice little dividends there. All right, I think I have done my part. Let's see if you guys have any questions, see if I can help you in any way. I agree. I would like a Tesla for some reason, but I just can't do it. I just can't do it, man. It's just, for me, you know, I'm an old car guy, so if I can, it's like, yeah, Tesla's nice, but I'd rather have like an old 54 Ford pickup truck that looks sort of nasty on the outside, but it's all brand new on the inside. That's just me. Unemployable. Why is everybody so pessimistic on Beyond Meats? That's funny. I could tell that's sort of a sarcasm in text. Nice. Kevin Stewart looking at preferred. You certainly can. It's a little bit more work still depending on what platform you're on there. It's totally up to you. A lot of times when Warren Buffett buys a stock like Bank of America, did he convert? I think he converted to preferred shares. But a lot of times Warren Buffett will buy shares and it makes this whole, everybody's like, oh, that's awesome, he bought these shares. They're usually preferred stock, or a lot of times lately they've been preferred stock. Yeah. Thoughts on Haynes, Celestial, and Zynga. Let's do Haynes first. It's sort of quiet. There's not really a whole lot going on there. Relative weakness type stock. So ask yourself, if the markets have been rallying, well, at least a little bit lately, and this stock hasn't moved at all, what do you think is going to happen when the markets fall, even if just a little bit there? So That one, a little bit of trouble. Zynga, I cannot believe it's had that big of a rally. That's impressive. I haven't looked at this one. Down a little bit today, no big deal, but very impressive rally there for Zynga. Yep. Do you think oil can go up ever again as the way demand is falling, inventory is constantly building up? Yep, it will. I have no concerns about that at all. Every time oil... So oil, by the way, is a trending commodity. When it starts trending higher, don't bet on it going lower. You got to wait till it actually cracks lower. You could look back, just look over the last couple years of oil, watch how it moves. When it starts to break higher, it trends higher. When it breaks lower, it trends lower. Trying to pick the bottom or top before it breaks is just almost impossible here. It will go higher, and I have no concerns about that at all. Every single time it falls, people go, this is it. It's never going higher again because now the U.S. makes all this oil. And of course, OPEC and everybody can make oil, so therefore there's too much supply and everybody's going to electric cars. Clearly that's an issue and maybe not the case if we watched the shareholder meeting with Tesla last night. Yep. George says, if you just told everybody where you're going to be on Sunday, expect to still have a quiet Father's Day. Now, I went to San Antonio last summer and I mentioned it. We had a nice little group there. It was hot as can be, so needless to say, I'm not going back to San Antonio. Actually, Sunday I'll be in Orlando, and Monday through Wednesday, no closing beat show. I will be in Sandusky, Ohio, and I'm sure you can guess why, because there's not much else to do in Sandusky, Ohio, besides one thing. Argentina mess, yeah, I don't follow it that much. I watch the headlines overnight just because I like staying up forever and watching this stuff on Bloomberg. No real comments, no real positioning for that. There's enough going on here where we can find opportunity. If we were in one of those areas where, China was flat, the U.S. was flat, Australia, Canada, you name it, all the major markets, if they were flat, okay, now we have to kind of talk about that, right? Because now there may be opportunity. India, right? What's going on over there? Turkey, what's going on over there? Those things are sort of pushed off to the side because there's a lot of activity going on here. If our markets really get quiet, oh, you bet. Turkey's coming front and center. Argentina's coming front and center. Venezuela's going to get back in the news there. But for now, you can see how they choose what they want to share with you. It's very selective there. When will we be live 24? Are you kidding me? Nice, Mike. 24/7. Kevin says, I know there's never picking a bottom, but would you say keep a certain percentage of cash standby for pullbacks? You can. I know people that like to do that. I can actually quantify how that's a bad thing to do, and we've done that class for our customers and stuff. But I understand that. I totally understand when somebody says, let me just hold a little cash, and something's going to fall at some point, and I'll get excited about it and want to buy it. I can buy that. If that makes you feel good, then I'm cool with it. If it starts affecting your returns and you're looking around and you're like, shoot, I could have just bought a mutual fund and held it and had better returns. Or if you're working with us and you notice I'm beating you because you're sitting there holding cash, then you probably want to, you don't want to miss out on anything. But I totally understand. Mm-hmm. Steven says, is there any downside to a Roth IRA for someone in their 20s just starting to save versus a 403B or 401k? You absolutely start with the 401k or whatever you have offered at work as long as there's a match. If they're offering to give you free money for you putting in some money, nobody can beat that. Don't let anybody talk you into doing a Roth IRA. I know that's our job is to offer this to people and hopefully, hey, come join us at Jazz. But you have to. You have to start with the 401k as long as there's a match. You fill that thing up to the match. If there is no match or you fill it up, then you come and you do the Roth IRA. Absolutely. And being so young, you might want to look at the Roth 401k or the Roth 403b if those are options. Yep. Sorry, I missed a few of those there. Yeah, I'm looking more forward to Top Thrill Dragster and Millennium Force. I don't know why. I just think Millennium Force looks like it'd be a fun one. Yep, that'd be cool. We'll see. Yeah, thanks for your comments there on the help and support the answer to the 401k question. You got to do it. It's free money, right? Don't miss out on that free money. That's big, right? All right. I think we've covered everything here today. We did a couple upgrades and downgrades. Beyond Meats was downgraded again, by the way. It didn't seem to matter today. I saw it was a little higher, but Chipotle upgraded. Evercore went through all the restaurant brands. So if you're interested in knowing what people think about restaurant brands, go look up Evercore's ratings today. They went through all of them. So they're kind of letting you know what they found with like McDonald's and Chipotle, Mondelez. They put the snack brands in there as well. The company that runs Longhorn and Darden Restaurants. Yeah, they went through those as well. So check them out if you're interested in that. And that's it. So we'll wrap it up there. We'll be back tomorrow, of course. Do it again. Remember, no closing beat next Monday, Tuesday, or Wednesday. May have an extra video or two in there for you planned, but that'll be it. And don't forget to guess the Dow. Go to the website, check it out. We'll see you later.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.